And the Finance Ministry has raised its growth outlook for the South Korean economy to 3% this year, taking into account the country's remarkable chip exports. Our Baek Ju-hee covers this upward revision.
Unveiling its economic strategy for the second half of the year on Tuesday, the government has significantly upgraded the country's growth outlook. The real GDP growth forecast for this year has been revised upwards to 3%, a substantial leap from its initial 2% projection. If achieved, this will mark the highest growth rate since 2021. Meanwhile, nominal GDP growth, which includes inflation, is projected to reach 12.3%, marking the highest level in 3 decades. The adjustment comes as rising chip exports lead to faster corporate investment across the country. Accordingly, the government officially announced its new 345 vision to achieve a fundamental turnaround for the Korean economy.
올해가 잠재 성장률 3%, 세계 무역 4강, 국민소득 5만 불이라는 대체에 불과 대한민국으로 도약하는 원년으로 기억될 수 있게 힘을 모아주시길 부탁드립니다.
To achieve this, Korea is accelerating its 3 major mega projects centered on semiconductors and AI. On top of that, new super innovation projects such as sensors and next-generation secondary batteries will be newly designated for aggressive development. With strong tax revenues, the government will provide massive funding to secure these advanced technologies. Also, the government has identified young people and talent development as its core investment targets. This year's net employment gains are expected to slow to just 1,500,000, down about 40,000 from last year. This comes amid persistent global risks and a sluggish recovery in the domestic construction sector. In response, the government has pledged to train 200,000 young specialists in high-tech fields and create 200,000 new job opportunities. To help young people build long-term wealth, the government will launch a new youth-type individual savings account, which will offer tax-deductible benefits and tax exemptions on investment returns. Officials also promise to quickly address regional gaps and the economic divide between industries. To counter the risk of a triple high inflation, high interest rates, and high exchange rates, the government will deploy full-scale stabilization measures, including large-scale food discounts and flexible energy price controls. Baek Ju-hee, Arirang News.